All right, hello everyone. Welcome back to another weekend analysis video. We have a lot to go over this week. Obviously, what I was expecting last week didn't really happen. All of it did not happen. If you remember last week, we talked about a bounce happening early in the week, and that I expected more downside in the market. Now we haven't gotten it yet, and we got a rather large bounce. And there were obviously some key points of interest to look for on the upside that I mentioned last week. The first was this breakdown candle high. So you can see as the market gaps over this high on Tuesday here, and you close above it, right? You get a massive gap after they make it look like they're forming an inside day to go lower potentially. They gap it up, and that turns the market bullish. On top of that, what was the level that we said would be very strong resistance was this gap. And it was. And after we came back up on this gap up, we actually closed above that gap. So that turns the market pretty bullish. It says that we're going to go test the highs. And so that's exactly what happened. We barely closed under the highs here, but we closed over the breakdown candle high, right? We closed over. You can see that. The next day, we come and test it. We stay up, but the market is struggling to get anywhere, and that's fine. We came a long way, right? It needs a little break. But the problem I'm seeing here is that Friday, we've closed back below. And if you come to an hourly chart, I mean, you can really see when you mark these breakdown candle highs. Let's get the actual number in here. Right, when you mark these breakdown and breakup candles, you can see how incredibly important they are. The market runs up, comes away, but keeps hovering right underneath it. Finally get up, we're holding it. We just kind of go sideways, and then we try to hold it, hold it, hold it. And late in the day on Friday, the bears see a little bit of strength, and they bring us back below that level. Okay, that's fair enough. That doesn't necessarily mean that this market is going to just crash and burn again, but we have to be aware of the fact that that can happen. We're going to go through some other sectors. There's a lot of different signals being sent. It's honestly not too clear. There's a lot of divergences, and one way or another, the markets that are weaker are going to catch up to the ones that are stronger, or the ones that are stronger are going to pull back and catch up with the weaker markets. But as far as, let's just look at weekly charts for everything, and just take a look. This weekly trend line that was broken out of, all we've done so far is come back to retest that trend line. Now, even if this daily chart on SPY is showing, okay, maybe there's a little bit of weakness at the top here. And is it impossible for us to just go sideways right above this trend line until maybe we catch up with this trend line down here, right? Or can we go sideways for a month or two, right? And then just bust through the top? Absolutely, we can. So that's going to be a key area to watch for me, at least, is this weekly trend line for the big picture on SPY. But weekly chart, there's absolutely nothing wrong here. Daily chart, we are above all of the moving averages, but showing a little bit of short-term weakness potentially. So key areas to watch would be this opening range low here. Whenever something gaps, comes down and makes a low and trades away, always keep that level in mind. So around 330.7, and then you've got a breakout area essentially right below it. And so right around this area here, you've got a gap, and then potentially even the top of the breakout area around 330. So you've got pretty key support in here that has been built, and it's going to line up with this gap, former pivots over here. You've got these pivots just below, so there's a lot of support within this 330 to 328.50 area, let's call it. So if the market does see downside early in the week, that's the area we need to be watching. If the bulls are going to save it and just trap bears into thinking we're going to die again and continue on our way up, that's the area to watch. If we do start getting below, really in my opinion, this opening range low here, 327.72. I know I'm putting a lot of lines on the chart, but okay, if we get below this level, that lines up with several pivots, right? All these pivots, it's a very, very important level. We gapped up huge and only could retest, boom, right there, and went on our way. If we end up getting below that level, definitely watch out below. That could be, it doesn't have to mean we're going to crash and burn again, but it likely means that we would retest the lows. We would at least retest this gap. I think we would retest the lows. And again, we could just continue sideways like this, right? If we do not continue sideways, this zone is the next area of major support I'm looking for. We have a breakup candle, a lot of balance in price throughout this area, and I've included a gap just below. Maybe it comes slightly lower than this zone. It's possible, but I favor the upper part of this zone a little more for a bounce. And then again, this is just planning way ahead, but obviously you have this very, very major point of structure down here that lines up with two trend lines. So that's kind of the end all be all. I would not expect to see this week at all, but just so you guys know, very major area of structure. On the upside, once again, if we get back above, in my opinion, this 332.53 and start closing daily back above, we're just going to go sideways to move higher. Okay. Let's go on to the sectors. Small caps. Small caps are not looking great. But again, let's look at a weekly chart. Okay, they're not looking amazing here, but we have to realize we're basically squished in between what I would consider two pretty important areas. First of all, we're above all moving averages. Okay, fair enough. And then what do we have up here? We have the breakdown candle high. That's where we found resistance. But what do we have here? We have a many month long bull flag. And we're simply testing the top of that bull flag. We've bounced off and we've seen some resistance at the end of the week. So is there anything really wrong with long picture IWM? No. We are simply bouncing at support. Key area to watch here, right? Key area to watch is going to be, we ran up here, we found support, right at this zone. Ran up, failed, ran up, failed. So on the upside, if we can get back above this breakdown candle, that's the key for more upside. On the downside, if we are holding where we came up, found support, which we still are, right? This 164 to 165 area, we're still holding this right here. If we break back below that and we can't hold at this gap and get back up, if we cannot hold at this gap and just get back up quick, most likely within the same day, then you put yourself back below the 50, back below the 20. You probably go down and test these lows, potentially make a little bit of a lower low. Okay, so this area really needs to hold if the IWM is going to lead the market to the upside. Otherwise, we could get that downside early in the week. DJT is in the same thing, right? We are diverging. We're looking worse than the market is. We're not at all-time highs. And weekly chart, let's take a look. Weekly chart, it looks very, very ugly, right? In my opinion, we are holding. We've seen a bounce. What's the key area here? It's the red zone, right? The red zone has been the key area on the DJT. And what are we doing now? We are rejecting. As long as we are below that, this has to look bearish to me. We tried to kind of break out on the month, failed that monthly breakout. It just doesn't look great. Now, to get back up, right, we need to get back above this gap that's just above the red zone. So until then, we're essentially in a bit of a range here. You can see from prior price action, it likes to kind of just go sideways when we're in this area. And so I wouldn't be surprised if it continues sideways, right? If we were just to continue sideways in here, it's potentially a bull flag to go higher. Now you start getting, like I said, below this area here, you're likely going to test the lows again. Do we stop at the lows this time, right? Maybe the second time around. Right now, I'm seeing short term, we were only down 0.15% compared to a spot that was down 0.5%. So that's telling me something. We came down to the gap and we traded away. We're in between two gaps right now. I think this one will be one to watch early next week. Because this is actually diverging to the upside. This market can often send hints as to which way the market is going to go next. I'm interested to watch this early next week. You should too. Notice if this is leading to the upside or downside on Monday, and if we're getting below this gap or above this gap and holding, because we're right squished in the middle right now. And this one, if we can get back up here, can maybe make a run to put us bullish again. This one is interesting to me. I'm wondering if we can potentially, I'm not sure if there's a good trend here. Yeah, so that's interesting, right? We had a bit of a downtrend there. Pretty nice, 4 touches, 5 touches. We've gotten out of it, and we're kind of holding our own here, right? We've held support, we've held this breakout area, we've gotten some upside, and we're kind of just going sideways, bull flagging. So do we come up and try to test this area? And does it work? I think we should watch for that in the DJT early next week, showing a little bit of relative bullishness. The SMH, the semiconductors, these ones are really, really interesting to me, looking pretty bearish in my opinion. The SMH had a pretty crappy day, especially when you look at, this is a tech sector, and you look at the Qs, and look at that, they were only down 0.4, while the SMH was down 2.3%. So the SMH had a terrible day, closed underneath that gap. That's bearish. This is the important level to me, 140, 157, around that area. Right, you've come up to that area. Look at how much the struggle, it comes down, tests it, gets below it, closes on it, over it. Just look at how many touches this area has had. If the SMH gets back below that level, I like it to go down to this zone. If the SMH holds that level and continues sideways in here throughout the week, I like that as a bullish setup. I would be watching this level on the SMH. I'm actually just going to set an alert on it right now because I want to see if that's getting broken. Okay, weekly chart, SMH. Anything really wrong here? No. We haven't come down to test this area yet. That's noted. Uh, we've come up, rejected, and okay, we're holding underneath that area. So it looks again like we could come down and test this area. But this isn't an uptrend. It's simply been going sideways for the last 2 months. So we can't really say anything is wrong with the long-term SMH picture whatsoever. While shorter term time frames, they are showing a little bit of relative weakness. Right, you've got this down move. First of all, you've got the initial down move. And remember when SPY had the initial down move, we had this gap down and we said that gap would be important. The SMH has not even filled that gap. That's pretty important to me. Either one, it's showing relative weakness. If we do get below this level and the SMH never fills that gap, that's really bearish, really bearish. If the SMH ends up bouncing here, I would expect it to come and try and fill this gap. But if it keeps trading away, I don't know, this is looking really bearish to me right now. If we cannot bounce here, this could be bad for the SMH. So, like I said, a lot of diverging signals within different sectors. And yeah, the XLF is interesting to me, right? We bounced on a very big support area. We came up, we went for the all-time highs, we made new all-time highs again, but again, we've rejected them. So there's absolutely nothing wrong with this sector at the moment. We simply came down to test a breakout area. We've come back up, and where are we now? We're just sitting back above the moving averages. We're sitting back at the all-time highs. Sure, we had a rejection. If you want to look at this hourly chart, yeah, there is a bit of a reversal candle there. So there's potential on short-term charts that the XLF is looking weak. But you look at daily, it looks fine. You look at weekly, looks absolutely fine. You had a bit of a breakdown there. We haven't closed above it. So when you work down to the smaller time frames, you start to see, okay, maybe there is something going on here. You see a little bit of a volume pickup. You're seeing non-acceptance of these all-time highs, and we're kind of just floating down here. Is that getting ready to go lower? You kind of just have to wait and see. You know, this is a time in the market where, you know, it's really good to be patient and wait for the market to show you which direction it's going to go. When you have a lot of diverging markets like this, and you just don't have a clear picture, right? You don't have a clear picture. There's a lot of stuff that's just crammed together. Right? It's all crammed together. It's not quite clear. It's very choppy. It's pretty high volatility. Now, the last thing I want to cover is the Qs. The weekly chart. Is there anything wrong there? Absolutely not. Absolutely not. There's nothing wrong. We've had another crazy up week in the Qs. A lot of the FANG stocks are actually looking bullish to me. I think they're looking very good. Maybe that changes, but I don't see anything wrong with the Qs. That's me personally. Now, the one thing I'll say, you go down to a lower time frame here, you have a bit of a reversal candle. It's on pretty high volume. So I think the Qs do need to get above that high and close 2 or 3 hours above to confirm that we're not going to play down out of this. I think that's something that definitely needs to happen. But there's really nothing wrong with this market. Right? It's up, up, up until it's not up anymore. You know, maybe you argue we're at the top of a channel right now. Maybe we are. I don't know. Right? Maybe you want to draw something like this and say, well, we have a little channel here. Are we? Yeah, that's totally valid. You know, maybe we're ready to drop. Maybe that reversal candle on the hourly is ready to see some short-term downside. it's kind of looking like that. It's looking like a lot of charts may be ready for downside early in the week, and then we have to judge, is it going to lead to further downside, or is it just a pullback? The market's going to cool down a little bit and we're going to go on our way higher. Okay, so I've given you guys those important levels to watch for. Hope this helped you guys. Please like, subscribe, and I'll see you in the next one. Peace.